if you look at what's happening to gold, the last month it's up, the last 3 months it's up, the last 6 months it's up, year to date it's up, last year, year over year it's up. It's in a bull run, and it's going to stay in one that could be motivated if the U.S. equity markets pull back, which I think they will. I think I remain a bull, and whether you define it early, middle, late, or it's the bull run will continue. What could really elevate things or change things is, I think, what really is in effect a bubble in the U.S. equity market. From an international point of view, 70% of the world's market cap is in the U.S. markets. The rest of the world doesn't count. This is amazing. And in 1980, the market cap in the U.S. was about 30% of the world's markets, which was kind of in line with the size of the U.S. economy relative to the rest of the world. U.S. economy is, it's about 27, 28, 29, 30%, depending on how you measure it. But it's more or less, let's say, around 30%. And in 1980, the market cap was about 30%. Well, now it's skyrocketed. Everybody and their brother want into the U.S. market. And I think the U.S. market now is overvalued and overhyped. And it's in a bubble. So when that bubble pops, you can watch gold take off again, accelerate. If you look at what's happening to gold, the last month it's up, the last 3 months it's up, the last 6 months it's up, year to date it's up, last year, year over year it's up. It's in a bull run, and it's going to stay in one that could be motivated if the U.S. equity markets pull back, which I think they will. One reason that I say that I use the word bubble is that when you get every dog and cat saying the same thing, that the U.S. is the only place to be, the U.S. is an overachiever, the U.S. this, the U.S. that, and we all want to rush into the U.S., that's when my contrarian juices get flowing, Jesse. So something is wrong. If everyone is saying exactly the same thing, it's about ready to pop. I think you have to. China, of course, is the elephant in the room when it comes to commodities. So you got to watch China. Now, China has just made the Politburo last week made an important statement. They said that they wanted to loosen up on the money, and they're right, because Hanke's golden growth rate for the rate of growth in broad money in China is a little over 11% per year, and that would be a rate consistent with hitting their inflation target of 3% per year. How fast is it actually growing? It's growing about 6%, way below. They're suffering from anemic growth in the money supply. So what the Politburo said is the right thing. They want to increase the money supply. Whether they're going to be able to pull that off or not, I don't know. But if they do, then that's very positive sign for commodities. So that's on the positive side. Now, another thing that's positive and could create spikes is the geopolitical thing. If the U.S. keeps pushing them, they're going to squeeze the rare earths and the critical materials. They've been doing this, by the way.
Yeah.
Just in the last few weeks. Since August, they've been putting the squeeze on various selected critical materials. Just take antimony, for example. That first they put a restriction on antimony. Then on December 4th, they put a ban on exports of antimony going to the U.S. What's happened to the price of antimony? It's gone up 70% since the restrictions in August. So which is it? What's another one that I'm looking at? I again, lithium is basically been wiped out, but it's going up. I think it's bottomed out and will go up, and the consensus thinks it's going up. The difference I have with the consensus is that I think there'll be some upward spikes along the way, and we might very well get a big spike next year. So the lithium market has bottomed. I agree with the consensus. It's going up, up, but I think the consensus is missing the analytics and diagnosis of the market that will lead to occasional spikes as it's going up. So those are two. Again, watch the money supply in China is the key. The key is a money supply. Remember, if you change the money supply, what happens? Nominal GDP goes up. If you goose the money supply, nominal GDP goes up. And nominal GDP has two components: the real growth in the economy and inflation. But it takes time. There's a lag between the change in the money supply and when the occurrence of asset price changes occurs. They will go up first, then economic real activity will rev up a little bit, then inflation will rev up. So we have to watch that, because if it occurs in China and the money supply, they really do get it going, and they be our policy prescription, which is correct, by the way. If they actually can implement that, then China will be growing more rapidly, and inflation, by the way, will come up. Now it's non-existent. It's 0.2% per year inflation in China. It's way below the target of 3%. So if real activity starts, if the money supply goes up, real activity will go up, asset prices will go up, inflation will go up, and that's going to be very positive for all kinds of commodities. In addition to that, that's the demand side of the picture for commodities. The supply side could be very disrupted by China putting restrictions on various critical materials. You know what Deng said in 1991, I think, or 92. I can't remember for the year for sure. He said, OPEC has oil, China has rare earths. And by the way, since then, they've developed a whole set of strategic policies dealing with rare earths and critical materials. So they're locked and loaded. If Trump wants to screw around with China, baby, they're gonna hit back hard. The U.S. is just totally behind the curve on this. They don't understand what's going on whatsoever, and they don't understand the fact that China totally dominates in what I call the 3 M's: mining, metallurgy, and material sciences. If you look at education in those fields and so forth, the top 20 universities in the world in those 3M fields they're almost all dominated by Chinese universities. Whereas if you look at the top 20 universities in the world in general, not in those special fields, China has nothing. They don't show up at all. So they've put all their eggs in the critical materials field. They dominate it, and they're going to use it as a weapon of war. Well, everything has me concerned. We've never had this many unstable instabilities occurring at the same time. You mentioned the war in Europe, and you mentioned also, let's say, the broader Middle East war and military activity and aggressions of the Israelis, and completely unknown of what's going to happen in Syria. I mean, it's going to. I think it could end up in a completely chaotic situation, and don't forget the big thing is the commercial war, if not geopolitical war, that the U.S. is in with China. You have the two biggest economies in the world are at loggerheads. So everything is. Well, oh, and just another little thing. How about Sudan? We got a big war going on in Sudan. We have a huge number of casualties. We're going to have a big famine in Sudan. A lot of displaced people, a lot of people killed, and so forth. So everything is bad from that point of view. I would say I can't think of, well, now that I'm thinking about it, maybe the island of stability or quasi stability might be South America, but the U.S., remember, is on the attack against Venezuela, so we don't exactly know what's that to the extent that there's an equilibrium there. It's kind of an unstable equilibrium with the U.S. versus Venezuela. So let's go back to Ukraine, because Trump has indicated that he'd like to have that thing wound up as fast as possible. But the real situation is that the Russians have already won that war. Most people don't realize the Russians have won. And when the shooting stops and they come down to negotiations, what the Russian position is very clear. Number one, Crimea is part of Russia, and they're going to keep it. And the occupied territories in Eastern and the Donbass, they're going to keep all of those. And they're going to demand that Ukraine not be a member of NATO, either de jure or de facto. So that's the negotiating position that the winners of the war will be taking. And my conclusion is that that's going to be tough medicine for the West to swallow. And the negotiations on this are going to drag on for a long time. So if there is a peace and they stop shooting, it's going to be, shall we say, a Cold War, an unstable situation for quite some time. Trump is not going to wind this thing up in a hurry. And what has been the collateral damage associated with that? Well, Europe's economies have been destroyed by the war against Russia. And the other thing is that the fiscal situations in the European countries, many of them are in fiscal hot water. Just look at Germany. They've just had a no confidence vote. They've thrown out the government. They're going to have a new election in February. You've had the same thing a couple of weeks ago in France. And those are both because spending money at the margin for increasing defense, if you have no room or margin of safety in your budget, you're in trouble. Germany is tanked. Germany is in terrible shape, and France is in absolutely terrible shape. Moody's has downgraded them just recently. And if you look at the Eurozone and look even at the IMF forecast for the next 6 years, they forecast that the growth rate for the Eurozone will only be 1.25%, 1.25% annual growth rate, very slow. The U.S. at 2.2%. If you look at U.S. productivity versus the productivity in the Eurozone, the U.S., since a great financial crisis, the productivity here is up 30% more than in Europe, 3 times faster growth rate. So Europe is just in terrible shape, and I think the straw that is breaking the camel's back, no one really talks about, and it's the extra expenditures on defense and the war effort that the Europe's engaged in with Russia. So that's kind of a, if the big story about the war against Russia is how it's destroyed the European economies.